The markets opened on April 3, 2025 with an ominous shudder. The Dow Jones Industrial Average, a key indicator of American economic health, tumbled by 2.5%. This plunge followed a terrifying freefall in pre-market trading that saw Dow futures plummet a staggering 1,300 points. It was like watching a replay of the 1929 crash, a high-speed train wreck in slow motion. The S&P 500, a broader measure of the market, wasn't spared either, shedding 2.7% of its value. Tech-heavy Nasdaq suffered the most, registering a painful 3.1% drop. It was a bloodbath on Wall Street, a sea of red engulfing traders' screens. The sense of panic was palpable. This wasn't just an American problem. Global markets mirrored the fear, experiencing similar sharp declines. From London to Tokyo, investors watched in horror as their portfolios shrunk before their eyes. The world held its breath, bracing for what felt like the inevitable another global recession. The question on everyone's mind was simple yet terrifying: how bad would it get? As if the stock market plunge wasn't enough, the US dollar decided to join the freefall. It tumbled to its weakest level since October 2024, a victim of the same anxieties plaguing the stock market. The dollar index, a measure of the greenback's strength against other major currencies, fell by a significant 1.2%. A weak dollar means American goods and services become more expensive for the rest of the world. This could hurt US exports, further slowing down the economy. It's a vicious cycle, one that economists fear could spin out of control. The repercussions of a weak dollar are felt globally. It can disrupt international trade, impact currency exchange rates, and fuel uncertainty in emerging markets. A faltering dollar adds another layer of complexity to an already precarious global economic landscape. The fear gripping Wall Street and global markets isn't just about a bad day on the trading floor, it's about the looming specter of a recession, a word that sends chills down the spines of investors and ordinary citizens alike. The signs are ominous. Manufacturing activity has been contracting for 3 straight months. Consumer spending, the engine of the American economy, took a nosedive in February, falling by 0.4%. Add to this the Federal Reserve's interest rate hikes, intended to curb inflation but also acting as a brake on economic growth, and you have a recipe for a slowdown. Even before the events of April 3rd, analysts at J.P. Morgan estimated a 40% chance of a U.S. recession in 2025. With the stock market in free fall and the dollar weakening, that number is likely to climb higher. The question is no longer if a recession will hit, but how severe it will be. Section 4: Trump's tariff tempest, a trade war endgame? The most immediate catalyst for the market meltdown is President Trump's latest move in his ongoing trade war: massive tariffs on nearly all goods entering the U.S. These tariffs, ranging from 10% to a whopping 50%, are designed to protect American industries. But economists warn they could have the opposite effect, triggering a recession and hurting the very people they're meant to help. These tariffs are not just a slap on the wrist, they represent a dramatic escalation of Trump's protectionist policies. The average U.S. tariff rate will skyrocket from a modest 2.5% last year to a staggering 22%, the highest since the dark days of the early 20th century. The impact on American consumers is expected to be significant. Experts estimate these tariffs will cost American households an additional $660 billion annually, essentially a massive tax hike. Prices on everything from cars to clothing to groceries are expected to rise, putting a further squeeze on already strained budgets. Section 5. Seeking shelter, the rise of safe haven assets. As panic grips the markets, investors are scrambling for safety, shifting their money away from risky assets like stocks and into so-called safe haven assets. These are investments considered less susceptible to economic downturns, offering a port in a storm. Gold, the classic safe haven, has surged to a record high, breaking the $3,160 per ounce mark. Investors are drawn to its historical stability and its ability to hold its value during times of economic uncertainty. Another safe haven attracting investors is U.S. Treasury bonds. These government-backed securities are considered among the safest investments in the world. As investors flock to bonds, their yields have fallen, with the 10-year Treasury note hitting its lowest point since October 2024.